welcome to today's market fundamental and technical breakdown. My name is Anthony Phillips Njoku, and I am the CEO and founder of 10x Digital Lane. In 10x Digital Lane, you have the chance to learn about digital assets, how to trade the digital market, and how to be able to make passive income from the digital businesses we operate in real estate and forex trading. So today I'll be taking you guys through our fundamental and technical breakdown for the time period of June 5th to June 9th. This fundamental breakdown always holds on Sundays, but we were not disposed to be able to carry out that obligation yesterday, so we decided to offer that obligation today. So starting with DXY, DXY is the strength of dollar, and if you can see, this was the position where the market was last week. The position where the market was last week during NFP. We traded NFP together with the team. We were online on Telegram, and a lot of people benefited. They made a lot of money. So we placed trades, and this is the strength of dollar. As soon as dollar became strength, a lot of risky assets like Euro USD, GBP USD, gold was selling. So this was the movement of the dollar. We have this other block over here, and also a H4 validation point where we expect reversals to come into the market and where we have sell pressure liquidity. So from here now, I expect a little bit of corrective structure, not a pullback. This is an impulsive wave. Impulse correction, impulsive. This is a pullback. I'm expecting what? A corrective structure. A corrective structure can be in this form. It will be choppy and very, very slow. It will take about Monday, Tuesday to get this corrective structure. Wednesday to get this corrective structure. But Thursday, Friday, then we'll start expecting the next push to the upside, which is the impulsive wave. I'm more interested in trading the impulsive wave, and I have a target of 105.000 psychological level for the DXY. So that's it for the DXY, the strength of dollar. So diving into Euro USD. I have been monitoring the DXY, and I see currently that the DXY is inside the bearish sell pressure and H4 validation point, where I expect the corrective structure to start playing out. Inversely, I expect the inverse reaction to occur on the Euro USD. I expect the inverse reaction to occur on the Euro USD. So from this point, we have what? A red candle. Also, we have buy pressure liquidity over here at this H4 validation point. So currently, market is inside that zone, and it has fulfilled efficiency. This trade is a trade we placed on NFP. I'm still holding one trade. I closed out one, and I'm holding one because I have the bias that this market is going to drop down to this psychological level of 1.06000. That's for the euro. But I expect what the corrective structure to play out. This is going to be a very choppy corrective structure. It's not going to be fast. It's going to be slow. It's going to be dull. It's going to be manipulative. So we're going to expect this corrective structure to be upside. We have a return to origin over here. I already broke even on this trade. If it goes up and takes me out, I'm cool with that. But I have this bias that this market is not going to go up to that level. Why I expect market not to go up to this level is because if we check this Fibonacci retracement point, we have what the 62 Fibonacci retracement points here, which is what the discount level. And over here we have the equilibrium, which is the 50%. So this trade is still running in profit. I held on to it. I'm not closing it out any moment soon. But there is a structure I will see over here. And when I see that structure, I will close out that trade on any profit I get. But I expect the market to get into this point before what the next impulsive move to the downside. There is a return to origin, a bearish return to origin, which has seller's pressure over here. So if here is disrespected, I know for sure the 79.00 Fibonacci retracement points and discount level will be respected because we have an order block and a return to origin over there that has not fulfilled efficiency yet, which means that liquidity is lying there. So that is it for euro. The psychological level of 1.06000. That's why I expect the market to come back to breaking this low. There are liquidity lying this low, breaking this low, and there are more lows over here. But let's just stick to this current view. I don't want to start breaking down the wave to you guys. So the next on our list is AUD/USD. Man, AUD/USD is already moving in our direction. Yeah, I had a bias for a sell for AUD/USD, but it never came into and fulfilled my efficiency. But it went into a 15 minutes efficiency and fulfilled it. So AUD/USD currently, this is what the last green candle you can see over here before the NFP. And this is what the H4 validation point. Market came into here, fulfilled the efficiency over here, created a Judah swing. Also use this candle to fulfill efficiency at this H4 validation point, this green line. It created a Judah swing. What does it mean? Taking out to buy stops and sell stops. You can see it plainly with this candle without going down to smaller time frames. But if you go down to smaller time frames, that's when you're going to be able to track down the current efficiency that needs to be fulfilled or liquidity voids that needs to be fulfilled. So currently at this point, this is the liquidity that I expected to fulfill, M5 liquidity that needs to be fulfilled. Instead, it came into here and fulfilled an M15 liquidity and continued dropping. So for AUD/USD, I'm long on a massive short for AUD/USD, taking out this low. There's liquidity over here, taking out this low. And then we have the psychological level, which also has a H4 validation point, which has not fulfilled efficiency for a very, very long time, which is over here. Was tracked and found over here. There's a H4 validation point here that has not fulfilled efficiency, which I know that DXY, when DXY goes to that psychological level of 105.00, what happens? AUD/USD, USD is going to be strong, and then it's going to take down this low, and then over here at the psychological level of 0.64000. But we have liquidity over here that needs to be taken out. There is high chances that AUD/USD is going to still reverse and come back into this return to origin over here, my M5 return to origin, before it still drops for this week. You understand? So that's what I see. But basically, what I see on AUD/USD is what the sell side liquidity that needs to be taken. So for GBP/USD, I don't have a complex breakdown for GBP/USD. Let's just leave it. Yeah, okay, so for USD card already fulfilled my efficiency. I'm expecting a corrective structure on USD card. Over here, USD card came back fulfilled efficiency as soon as the market opened up. The first candle that opened up the market fulfilled efficiency and started buying. You understand? It never came back to that efficiency. Instead, it came back to an M15 efficiency over here. As soon as London session opened with this red bar, you feel that came back and touched that efficiency again, that liquidity void, and then started moving up again. The psychological level I expect USD cards come back to is 1.355000 psychological level. Yes, and over here you can see that we have the last green candle over here, which can also be called or seen as what an order block. So it could go beyond that psychological level. The market will go beyond that psychological level. But currently, based on what I see on the market, I expect USD card to continue the buy side liquidity, the buy side. So, well, it's going to be a corrective structure. It's not going to be impulsive. It's going to be choppy. And by corrective structure, it's going to go something like this. It's going to even give you some complex structure as it's creating this move. But it's not going to be smooth like we're expecting. Like whenever you see volatility and liquidity coming to the market and you see massive candles like this massive candles like this, yeah, it's not going to be like, it's going to be a corrective structure. It's going to gradually keep moving gradually. So that's what I see for USD card. It has already completed efficiency and it's already in profit. So the next on my list for this week is US oil. I don't know how many of you that trades US oil, but for US oil, clearly for wave traders, you know what I see here. This is an expanding flat. You can see that it's an expanding flat. So for US oil, I expect it to come back into the history validation point. When it comes back into the validation point, then we'll now start expecting the next structure. If it breaks above, we are going more high. But if it's what respect this structure, this history validation point over here, we're expecting more downward push. But I see this structure playing out based on waves. That's for US oil. Then the last on the list for today is BTC. Man, I expect Bitcoin to drop to 25K. Last week trade played in our favor. We saw Bitcoin at this point. We had an N50 market structure break, but it never came back to return to our origin. But it went up and took out our trade at 28,000, where I said Bitcoin is going to go to. Came back, activated the trade, but this week the structure changed. I had to close out that trade. We now have a sell side structure, expecting the Bitcoin to go back to 25,000 before we buy. Why? Because we have this descending what downtrend. So it's gradually following this wave structure. Gradually following. So what can you see here? It went to this peak. Even if it didn't touch this line, it has formed the resistance here. Yes, it has some ticks to touch this line. But as far as it did not touch this line, it has formed the resistance. And what else can you say that? What else made us to decide that the structure has changed? It dropped, came back up, then created this wave. This is A, B, C, D. This A, B, C, D, E. So we're expecting the next move, which is for the E wave downward, because the ABC C wave needs to be needs to have a longer push than the A wave, and then E wave is likely going to be between this level. It's going to come back to this level, take out this liquidity here before we come into this 25,000. But my overall psychological level, I'm working with psychological level right now based on what a lot of institutions like Goldman Sachs and investors are saying about BTC. A lot of psychological level are pointing at 25K, 25K, 25K. So it's a psychological level. When we come to the market, we analyze the market with fundamentals, we analyze the market with technicals, we analyze the market with mindset analysis. So when it comes to mindset analysis, you have to really depend on what is the market saying about this asset, because what the market says really can drive demand and supply. So this is it for BTC. And certain more push to downside. We already have our entry, but it has not fulfilled the efficiency. 5 minutes entry. You understand? But the early entry was already taken at this point. 27,219. We're risking 1:2. Our trades are mainly 1:2. Most of our trades in the past are 1:2 for Bitcoin. We're risking 1 to make 2. We're risking 1 to make 2. So to be on the safer side, we're living at this restart point when we saw a reversal. That's where our stop loss is going to be. And then our target is going to be 25K. So that is it for the technicals. I'll go over to the fundamentals right now. For the fundamentals, this is for this week. Okay, Sunday. Fantastic. Let me refresh. Okay, so for this week, why I held on to that euro trade was because as earlier this morning, I saw a high impact news on euro. This is a high impact news. We had medium for exports month over month. April to May, the export was higher. And when there's exports, people buy your currency to be able to do trades with you. You understand? So that what makes foreign currency come into your economy and boost the currency. That's fundamentals 101. Then balance of trade. Balance of trade has to do with the amount of import minus the amount of exports. Exports are higher than imports because the exports month over month is high. Balance of trade, I expect that to be high. But that didn't really move the market. But what really moved the market this morning was the S&P Global Service for Euro. It was negative. As soon as this market came out, it dropped. It dropped Euro USD. I was just sitting there watching it because I was already in the market. I was just trying to see, okay, is this going to be my trigger for the buy structure, corrective structure I see on Euro USD? It was not the trigger. Instead, it kept on pushing the market to the downside. Over here, the same thing for USD, S&P Global Service for May, for Italy. This was for Spain. This was for Italy. And this was for France. All this was negative. I hope you guys know what a global service is. Services offered to other countries. You understand? Global services offered to other countries. It's negative. This country, they don't really offer more services to other countries, but they export most of their products. And what is Europe known for? Mercedes, cars, mainly. Cars. Yeah, that's why this export is very high. So that's it. Then there was not really much driver that made me to like say, okay, Euro is going to start buying. But what I look out for this today, a high impact news I look out for is what the S&P Global Service for the United States of America, which is going to be dropping in few minutes time. Okay, sorry, 2 hours and 22 minutes time. 2 hours and 22 minutes time. It's going to be dropping. I think that should be 2 p.m. West African time. So this has high impact. This has high impact of providing liquidity to the United States dollar, pushing AUD more down, pushing USD card more up, pushing Euro USD more down. But we see what's going to happen because we have a speech, and it's an ECB president legal speech. Most times, these speeches they come to fight against the news, the high impact news. I don't know how you guys trade most times, but when I trade listening to the news feeds. And I discovered that before a major news can happen in the United States of America, ECB can just come and say, we're going to hike interest rates, and we're going to make sure that the economy is stable, inflation is going to be put under control. Then, after they say it, 5 minutes time, USA is going to come and then say something about their own CPI, Global Service PMI, and they're going to say something like, oh, we're not sure about increasing interest rates. As soon as they say that, interest rate, what does it mean? You're buying bonds from Europe government. You're lending your money to the government. So when you lend money to the Europe government, what does it do? You're going to pay more interest if the interest rate is increased. Who doesn't want to make profits? Everybody wants to make profit. You come to the marketplace to make profit. You come to the marketplace to make sure that the $100 you come in today, you can be able to make 10x of it, 100x of it. So people are going to flood in their money in Europe. That's what's going to make Euro USD to buy. You grab. So I've been studying Euro USD for the past 8 months. So I really know what all this news impact does. And I'm in love with Euro USD. It's my only girlfriend. It's my wife. You understand? It's better you give one lady attention and understand them and be able to grow with them than you have multiple girls that you're going out with and you don't even know how to take care of them. There's going to be catastrophe because ladies are very complex. The same with currencies. There's going to be catastrophe with your trading. I don't even know how you trade or how you handle your investments, but for me, that's how I handle it. I've understood it from head to toe. You understand? So that's what I see for this news. No mind that is high impact. This press conference can fight against it. So you need to open your ears and know what this ECB, European Central Bank, is saying. Because it's just few minutes to that major meeting. It has happened over and over and over again, and history repeats itself. So that's it for USD. Then on Tuesday, I see by 5:30 AD, Reserve Bank of Australia interest rate decision. Wow, interest rate, that's interesting. So this news has high impact news on it, and it could push the AED up. because it has not fulfilled my efficiency yet at the 5 minutes 5 M5 liquidity void. So this could push the market up. Then so on is Europe, medium news. We have medium news on Europe. That should be when? Okay, that should be on June 7 a.m. This S&P Global construction. This construction, when it has to do with construction within and outside the country. Then retail sales within the country. When there's a higher retail sales, it's good. Money is exchanging hands. Investments are increasing. Canada, wow. So this is USD. This Tuesday we're high impact news by 3 p.m. Watching out for that. That could be a corrective structure to grab some liquidity that didn't feel efficiency before the continuation buy to the upside for card. Then Wednesday we have AUD, we have Reserve Bank that's high impact news, but that's a speech by 12 o'clock in the morning. If you're going to start awake and trade that. But I'll be focusing more on the London session. So based on what I'm seeing here, we don't have a lot of dollar high impact news for this week. We don't have a lot of dollar high impact news, but I'm looking for the day we have that dollar high impact news. Okay, we have balance of trade, import and exports in the United States of America. That should be on Wednesday, high impact news. This will be a news that will push the dollar down more further or make the DXY go up more further. Then at that specific time. So wow, initial jobless claims, continuous jobless claims. When you're in the United States of America, you don't have job, you are entitled to income. The government pays you. I wish our economy could develop to that standard. So if there is increase in jobless claims, it's bad for the economy of the United States of America. But if there is lower, this news is going to be negative. It's going to be negative, but unemployment in the United States of America was massive based on NFP results last week Friday. Go and check it out. So I expect this news on Wednesday. Is this Wednesday or Thursday? To be negative for USA for the initial jobless claims. There is massive initial jobless claims. And then we close the week on Friday is Canadian high impact news. Wow. So let's watch out. Let's watch out for Wednesday high impact news for the USA. We'll be trading that together, guys. We're trading that together. That should be by 1:30 West African time. Balance of trade, import and exports in the United States of America. If import is higher than export, it's bad. But if export is higher than import, it's good. So that's what we're checking out for 1:30. We're trading that together. We'll start the trading session by 1. If you want to join us, go to the comment section below, join our Telegram channel, receive the link to join us to trade that session and make profit as we do. Thank you so much for watching to this point. I really appreciate you guys who stay to this end. Please like, share, comment below, like this video, watch it on multiple devices, share it with your friends so that they can really know the direction of the market. I really appreciate your time. Have a wonderful trading week.